Hello guys and welcome back to another crypto update. So today we're going to talk about the monthly, the weekly and the daily. They are all in confluence with each other. So let's start with the monthly. As you can see, this curved resistance, 11-year resistance, we had these yellow or orange circles that when on the RSI we hit the 43 level, it meant that we were in the bottom. So right now, this monthly candle in 2 days time hopefully will close in a green candle and possibly would be the bottom for this bear market. And in confluence with that, we can see that the Fibonacci levels, we are currently bouncing from the 786 level. So we have already the RSI value in confluence with previous bear markets. We have the Fibonacci 786 exactly bouncing from it. We have the curved 11-year support. We are currently bouncing from it, and also we have a bounce from the 2017 high. Okay, this white line. So these are four things in confluence with each other on the monthly chart that are saying to us, listen, the bottom is in or nearly in. And on that note, let's move on the weekly and on the daily, because I think we still need to go a little bit lower than the 20k or 23 to potentially make our last leg down, but not below the 19k. I was targeting 13k previously, but this past week price action made me change my mind. So let's move on the weekly. So as you can see on the weekly, we are currently making this pullback after breaking this blue line, which was the megaphone pattern. Also on the RSI, we are currently in again this falling wedge pattern, and the bullish thing is that usually when we fake out, we tend to break to the opposite side. So we faked out to the lower side and we are possibly going to break now to the upside. So what can happen right now? For me, and for this I'll have to zoom on the daily, so stick with me. I think we'll get a rejection from this area, from this megaphone support trend line, which now is acting as resistance, or we could break to the upside and get squeezed until we break again this yellow trend line. But for me, I'm more inclined to say that we're gonna get a rejection to here to retest again the 19k level, because on the daily there's something else in confluence with that. So let's move to that. So on the daily, as you can see, we broke the broadening wedge, which was the orange line, so that is technically bullish, and targeting its high was about 47k, so that is the technical target for the broadening wedge. But we can also notice that the current price action is currently in an ascending wedge, which technically is a bearish pattern. So what I think it will happen next, we can pull out the weekly line, the blue line which I talked about, which is here, and we can see that it's in confluence with the apex of this ascending wedge. So what I think it will happen is we will get squeezed between these two lines and break to the downside to retest the 19k, which I talked about previously. Also on the RSI, we can notice that in history, these past bear flags or bearish patterns always were forming this broadening wedge, this ascending broadening wedge, and breaking to the downside. This one was big, broke to the downside. This one was another small one, broke to the downside. And we are currently doing the same exact thing. So it is good to assume that we're gonna repeat history and break to the downside while breaking to the 19k. So that is what I'm waiting for. But it's not everything bearish, because this could easily be, and I'm talking right now in a few weeks time, and it's also a speculation, but this could easily be a W pattern to eventually break to the upside again. So that is what I'm looking right now. I'm looking for the break to the downside of this ascending wedge, having support again at 19k and possibly going to form and break this W pattern. although it can go everything down to drain and continue the bullish momentum we have right now. But all those things in confluence that I talked about show me that we need again to retest that 19k level. So that's it, guys. Hope you enjoy. If you enjoy and appreciate this content, kindly like and subscribe. See you on the next one.